The relief rally is fizzling out as investors come to terms with President Trump's U-turns. Well, stocks are drifting today and the dollar recovery seems to have stalled as investors sift through all the noise coming out of the Trump administration on both tariffs and the leadership of the Federal Reserve. Russ Mould is investment director at A.J. Bell. Russ, let's start with tariffs. Treasury Secretary Scott Bessent's language on them, especially towards China, was a lot softer. So what do you make of the market reaction to these comments?
I think in the end there is still hope that this means there may be a thaw and a solution at some stage. Equally, it doesn't feel like it's imminent either, given that China doesn't seem to have particularly reached out in return. And some of Mr. Bessent's comments were still fairly strident and fairly hectoring. We all know that China's model in some ways is not sustainable. The Chinese themselves are looking to try and boost consumption, but I'm not sure that trying to hem it in on all fronts with tariffs is necessarily the right way of going about the discussion.
Now, the president seems to have also pulled back from his threat to fire the Fed Chair Jerome Powell, but if he had carried out that threat, how damaging do you think that would have been?
Well, we're already seeing to some degree a flight from dollar-denominated assets, whether it's the currency itself or whether from US treasuries. Central bank reserves have gone from 55% dollar denominated to US dollar treasuries to 45 over the last decade. I'm sure that process would have accelerated. So it probably wouldn't have done much for treasury yields, not much for the dollar, and probably quite a bit for the price of gold, I would think.
Now, we're in the middle of corporate earnings season. We've got Alphabet later today. What should we be looking out for?
Yeah, the numbers themselves, I think, we should be pretty solid. The first quarter overall, analysts looking for 12% sales growth, earnings per share growth of 6 to 8%. It'll probably be more about guidance for Q2 and Q3 going forwards. Q2 probably okay, but we may start to see some impact upon advertising spend and also on, particularly by, say, Chinese resellers, for example. So that could start to filter through to the numbers. But it's really the second half. If you do get a global economic slowdown and ad spend takes a bit of a dive, that's when you might start to see some pressure, even if Google's strong position should give it a little bit more protection than average. Also, don't forget, for the second half of the year, with the Olympics and the presidential election last year, there's some tough comps in there.
And what about AI when it comes to Google? Do you think they'll be announcing any more spending?
Well, it's interesting. We've been hearing that the chat that Microsoft has been pulling back on some data center construction going forwards. So Google, with its $75 billion capex budget, that number will be scrutinized. Before Trump tariff and trade blotted out the sun, and that was one of the biggest issues in the market was, is there an overbuild here? It will be the third sort of investment bust of my career, if so, after tech, media and telecoms at the turn of the century, then shale oil in the mid-2010s. It was, I think, becoming a legitimate concern for markets.
Now, what message do you think overall we should take from all these corporate results that we're getting in terms of the tariffs, in terms of the state of the US economy?
Yeah, I think we're getting very, companies responding in different ways. I think it was United Airlines who gave out two sets of guidance, one with tariffs, one without. We've had Signet Jewelers of America say, look, we're not going to have anything to do with that. We're going to impose extra costs on our suppliers, that we're not going to take the hit. So I think companies are generally still trying to work out what's coming within about 80 days' time. And I suspect that they will probably be thinking, well, if we don't know what's coming, we might just put a little bit of investment in staff or capital on hold. We'll maybe try and build some more buffer inventory just to see us through. So I think we're probably going to get some fairly guarded statements and some fairly muddy economic data figures for the next 2 or 3 months. The one to watch, I think, will be the NFIB Smaller Companies Survey. 80-odd% of American spending, corporate spending, 80-odd% of its employees. That's come down 3 months in a row already. If that starts to soften, then we really may start to see that come through to the headline economic numbers at some stage.
And that was Russ Mould from A.J. Bell. And don't forget, you can watch more videos on Reuters.com.